Hey, it's Clay Trader, and this will be a video chart on ticker symbol ORIG. We will take a look at the 15-minute time frame. Real quick, what do I mean by 15-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 15 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 15-minute time slices. I like you this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out where some of these levels of support and resistance a bit easier to see. Don't mean to state the obvious or rub salt in anyone's wounds, but pretty rough day. Not only was there the gap down, then the opening 15 minutes again represented by this candle. The price just kept on getting hammered, and then after it got hammered, it's still drifted down a little bit, but that's kind of where the interesting part of this pattern comes into play. And I'll just get this, or start to get it drawn up. And essentially what we have is a slight increase or a slight uptrend line, and then also just have, an area where it's kind of giving us this little wedge. Now, you could very well call this a bear pennant, and that would be absolutely right. So for you, pattern people out there, there would be the bear pennant pattern right there. So when I say that, when I talk about this, keep in mind that is the overall context, but just because it's a bear pennant doesn't mean that, there can't be any sort of bullish action at all. But the one thing that is interesting is after the nasty move here, the price did start to go sideways a little bit. Like I said, in fact, a slight little incline there via this lower orange line, the uptrending trend line. Now, just because the price started to go, slightly upwards, am I sitting here saying therefore it's guaranteed to skyrocket to the upside? I'm not saying that at all. Again, the overall pattern is still technically considered bearish. But it's pretty interesting because if you've been trading long enough, I'm sure you've seen stocks where they gap down and they get hammered, and then the rest of the day they just keep on going lower and lower. They don't build an uptrend line like this one had. So the bulls did show a little bit of signs of strength in regards to that. So that's going to be kind of the key, question on my mind is, is this the start of something bigger where it can, bounce up here? And if it can break through the top portion of this trend line here, maybe even get up to right around the 30-cent area or more, which when you're talking about the price range we're at, that's a decent size gain in terms of percentages. So worth keeping an eye on, but these are definitely the setups where if you can't do risk management and just, put together trade plans and all that, then this is, definitely the ones that you should avoid because it is a bearish context, but, within these bearish contexts, sometimes some nice bounces can happen. So we'll see whether or not that unfolds. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.